In today's video, we're going to be taking a deep dive look into Square. I'll use some different technical analysis tools and techniques to predict where I think Square is headed to next, whether we're really close to a peak, or are we going to keep heading upwards, maybe past even $300 or even past that. So starting off here, I just have Square open on a daily chart. I just want to see the entire price history before I get any sort of idea of where I think the price is headed. Now Square IPO'd back in late 2015 and the price was around $10 and it stayed in this $10 to $15 range all the way until early 2017 here. Maybe about March or April we broke out of this $15 range and started heading upwards. And Square started really getting its push through the Bitcoin run in late 2017 when Square got up to nearly $50 here. And then its run mostly continued through all of 2018 here, all the way up until almost $100 here in the peak of September, October 2018. From there, Square headed back downwards all the way down until our March market lows, down to about $30, and has since run to up to $272 now. So had you bought Square in the March lows of the market down here, you'd be up around 9 times your money on this stock, which is just crazy to think. But anyways, as you know, if you've seen some of my previous videos, the first thing I like to do on an empty chart is just draw some support and resistance lines. Essentially what I'm looking for in these is key spots at certain levels of price, such as exactly $100, at $80, etc., where the price has tested this level multiple times and then rejected either to the downside or used it as support and headed back up to the upside. Now once you practice this enough, these are going to stick out in your chart super clearly, but right here is the very first one I see. If I just hover my mouse here, you can see that dotted line, and if I draw the pink line onto it, you can see that this price level was support through here, resistance through here, and resistance 3 or 4 other times all throughout here before we broke out in May of 2020, and that started our major run. So those are the things I'm looking for with these support and resistance lines. I'm going to draw some of the obvious ones on my chart. I see another one right in here around $50. There's a bit of a smaller one in here around $135, but it did halt this run in early July here, and then we came back down and used it as support once we broke through inside of September here. And then this peak in here around $170 just after that September low that we bounced off of. I see this as another one in here as it was resistance here, took a little bit to break through here, came back down and was a bit of support and resistance through this zone, and on the flip side right here, once we were through it, it came back to use it as support once more. So this one's a little bit weaker I would say compared to the other ones that I've drawn, but I still like it on my chart. I've got another one that I see right in here where this is another resistance as we were coming up before a huge pullback, a resistance twice through here, broke through and retested it as support through this candle right in here. And nearly this candle right in here as well, used it as support too. And then the very last one that I see is this sort of resistance right in here at the top where we rejected first in December of 2020, we pulled back, came back later in early January of 2021, and then rejected once again all the way back down. So now that we have a few of those drawn, there's probably more on the chart, and if we were to zoom into different timelines, we could see them, but I like starting with just this as my baseline. It keeps my chart pretty clean, but I do have a few key levels that I know if price comes back down to those, we should expect some sort of bounce at those levels because it's already happened multiple times in the past. The next thing I'm going to do on this chart is actually just work on some Elliott Wave theory. And the reason I'm diving into this so quickly is because it's one of the key things I see when I'm first looking at this chart. So when I just have it zoomed out like this move from our October peaks to our March lows, it looks like a very clear ABC to me, just like this. And now before I go any further in Elliott Wave theory, for those of you who don't know anything about it, I do want to give you a quick recap. Now I have a 10-part playlist series on this, so I won't go too into depth here because it would take, of course, a lot of time, as you can see with the super long playlist. However, the basic concept of Elliott Wave theory is that we're going to trend upwards in waves of 5s like this, and there's going to be some pullbacks inside of that 5. Specifically, our 2-wave and our 4-wave are going to be counter trend moves, so the trend is upwards, but these are pulling back just a little bit, and the 1 and the 3 and the 5 of this 5-wave move are in the upwards direction, or they're in the trend direction. And once we have this 5-wave move, then we have a 3-wave correction in the market where the market starts to pull back. And that is labeled as an ABC, and it looks something like this, where 2 of the waves are counter trend or downwards in the market, which is actually the new trend now inside of this 3-wave series. The A and the C are both downwards, and the B is actually the new counter trend of our original trend that has reversed. So here, the trend is upwards, and our 1, 3, and 5 are with the trend. Here, our trend is downwards, and the A and the C are with our trend. The last important thing to know on an overview here is that once we have this 5-wave structure and this 3-wave structure, this actually forms more waves on a larger degree. So on a larger degree here, this 5-wave structure that we have actually makes up another 1 wave. And then this ABC actually makes up another 2 wave. And then we have another 3, 4, 5 upwards, not drawn to scale here. So this original 1, 2, 3, 4, 5 that we had is actually just a 1 wave on a larger degree. The ABC is actually a 2 wave on a larger degree. And then we're heading back upwards for the 3rd wave afterwards, which is essentially just a copy paste of this 1 wave once again. Another 5-wave structure will be inside of this to form our larger degree, and I'll change it to a different color just to make it a little bit more clear. This yellow 1, 2, 3, 4, 5. So these orange 5-wave structures make up the yellow 1, the yellow 3, and the yellow 5. And these white ABCs make up our yellow 2 and our yellow 4. Now I know that's a lot of information, and I just wanted to give you a quick reminder as well that I do have a Discord server that you can join. There's multiple hundred people that are trading options every single day. We have multiple learning sessions and multiple mentors to help understand what trades we're taking and why we're taking them, and help you really learn through the process of becoming a successful day trader. If you want to join, there's a link in the description below. Anyways, back to the Elliott Wave theory that I was putting on square here. I told you that the first clear thing I see is this ABC. This is a very clear 3-wave structure to me. So as I was just saying, that means that this must be either a 2 or a 4 in our larger 1, 2, 3, 4, 5 that's trending upwards. And as I see it, I think it's definitely a 2-wave. So I have this whole thing up to this spot as our 1-wave, and then this ABC makes up our 2-wave, just like I was saying. Now we need to put in the 3, 4, and the 5, which we'll work on next, and I'm just going to put them as placeholders for now. Now also, as I said, the 3-wave needs to be made up of a 5-wave structure itself. It has a smaller 1, 2, 3, 4, 5 inside of it. So in order to identify this 3rd wave structure, that's one of the things we're going to look for. However, before we start to dive into the waves inside of this 3rd wave here, one of the key things I do, and one of the things that will help you validate a 3rd wave, is the trend-based fib extension tool. This is going to measure the relative length of waves to each other. With a 1 wave and a 3rd wave in Elliott Wave theory, the most common ratio for them to see with this tool is the 1.618 to 1.75 zone, as you'll see here. So all I'm going to do is click at the start of the 1 wave here, and with a chart that I'm using all the way from the left-hand side here, I actually like to use 0 as the start of our 1 wave because at some point in time, this stock was technically 0. From the day the company was born, it had a $0 price of its stock. So even though our chart only tells us that after IPO, it started around $9, technically the stock's chart inception price started at 0. So I'm going to click from 0, and then I'm going to click at the top of my 1 wave here. And all that this is doing is measuring the length of our 1 wave so far. We're just grabbing this length. Now for our 3rd click of this tool, I'm going to click at the bottom of our 2 wave down here, just like this, and I'm going to pull it sideways, but you can see that it lines up with the bottom of the 2 down there. Now what this is doing is measuring the length of our 1 put onto our 2. So this pink line right here, it says 1 next to it. It's our 1.0. This is where the length of our 1 and the length of our 3 would be exactly equal. So just to show you that in another way, let's grab our price range tool down from roughly 0 here to the top of our 1. And then all we're going to do is take this. So this is our price 0 to 1, up $102, which is our peak of 1 wave. We're just going to take this and we're going to move it onto the bottom of the 2 wave here. And you can see it lines up perfectly with that 1.0 because that's exactly what this tool is doing. So like I said, the most common spot for a 3rd wave is in the 1.618 to 1.75 zone, which is these 2 Fibonacci levels right here. Essentially would mean that the 3rd wave is 161.8 to 175% the length of the 1 wave. Now you can see that we've actually already gone through this, which might mean that our third wave is actually already in, or maybe we're just headed towards our second most common target, which is this 2.618. In an extremely bullish uptrend, and especially on the macro level where we're starting price from 0 and trying to get a full count on a chart, this 2.618 is actually a pretty likely spot. So for now, I'm going to leave this box drawn around this 2.618. We'll give it a little bit of room one way or the other just to make sure we can capture a nice small range on it. And I'm going to delete this trend-based fib extension off my chart to keep it clean. So as of now, we'd be predicting this yellow third wave to be inside of this green box right here. Then we'd have some sort of fourth wave pullback after that, and our final fifth wave to put in new highs afterwards. Just for now, I'm templating these 4 and 5. This is not where I'm actually predicting them, and the time of this is also irrelevant for now. I'm just putting these randomly in here. So next up, what we're going to do is actually validate our third wave. Can we get a 5-wave count inside of our third wave that would maybe tell us that we're already at the peak of our third wave, or maybe even tell us that we're going to get to the peak soon? To do this, I'm going to go down to a lower time frame here. Maybe the 1 hour will look good. And yeah, I like that because all the way zoomed out, I can see all of our price from the bottom of the 2 there to where we are right now. Okay, so next up here, like I said, we need to count 5 waves inside of our third wave here. So I'm going to grab my tool again, and I'm just going to start looking for where a 1 wave could be. Now, if we just start on a very, very small scale here, what you're looking for with the 1-2 is a pretty decent sized pullback. The 2 is supposed to come at least 50% the depth of the 1 wave, and I even like to see it at the 61.8 to 65% depth. So just starting all the way from the bottom right here, I actually see this tiny move up and this tiny pullback. I think on some sort of degree, this is actually a 1-2 itself. And remember that with Elliott Wave theory, these waves are all inside of each other. There's waves within waves within waves, all the way down to the lowest degree. So I do think we have some sort of 1-2 right here. And just to get a rough count on it, there's a small peak inside of there. And let me just zoom into this area. You can see this could be a 1-2 right here. And then we do have another peak up here as a potential third wave, our fourth wave pullback, which is supposed to be shallower than the 2 wave. And this one from down here to up here, this is definitely a shallower pullback. And then we get one more push upwards. So on a very, very small degree here, I do think we have some sort of 5-wave structure to make this up. And then with this 5-wave completed, all that means, this is a 1 on a larger degree. So I'll grab my tool again and draw this as a 1. And then we're looking for the exact same thing, but scaled upwards into more price action, into larger time, into bigger moves. So this 1-2 right here, now we have another 1 up here, and this is our 2 afterwards. It's a really good pullback. And then we'd be looking for the 3-4-5. Now just to keep this from getting confusing, I'm going to change the degree of this because it's a degree higher, because this 5-wave structure that we originally drew is inside of this 1 wave here. And then I'll change the color too, just so you can see the difference. And now as I go, I want to keep my chart clean. I'm going to remove this original blue 5-wave structure. We've already validated that there's 5 waves inside of this green 1 wave. This is just making our chart messy. Let's remove that now. So now we're looking for this next green 3 wave. And remember that the third wave is the most impulsive wave in Elliott Wave theory, and it typically has the highest volume and a super strong push up to it. The obvious spot that I see as the third wave right now is all the way up here. So it's a pretty small 1-2 in here, but really we don't get any sort of pullback at all until all the way up here when we peak at about $136 and pull back about 25 points after that. So next up, we're looking for that fourth wave to fall in, and it would need to be right after this green 3 right here. Now, luckily enough, I actually also see a triangle inside of here. So I told you that fourth waves are made up of those ABC structures. However, they're often made up of triangles instead of ABCs. And these triangles are going to be labeled as actually 5-wave structures, labeled A, B, C, D, E. Now, if I just take some trend lines into the price action after this third wave right here, and I just draw something like this on our bottom line, and something like this on our top line, you can see that this definitely does form a triangle. We get a couple wicks above this triangle right here. However, if you dive into this, you can actually see that this is valid Elliott Wave theory. So I think that this definitely is our fourth wave inside of here, and technically it ends right about in here, because this would be our A, B, C, D and our E of our triangle before we upwards thrust out of a triangle, which is also extremely common. The other thing you can look at to validate a triangle is volume. So you want to see volume decreasing throughout the whole triangle. So you can see this is the highest volume we have through our entire triangle. If we just draw a volume trend line right here, we're definitely decreasing from here all the way out to here until the breakout of our triangle, and actually even a bit past it, all the way up in here is where we're seeing the volume spike. So I think this is pretty good so far. I think this is definitely a 1, 2, 3, 4. And now we need that fifth wave to come in, this green fifth wave, and I think there's a pretty clear spot for it. The next major spot that we have a pretty big pullback afterwards is all the way up here when we peak around 170 and pull back once again down to this $134 support and resistance zone that we've seen as the peak of the 3 in here and was supported and resisted throughout this area as well. So now once again we have a 5-wave structure that we've drawn. All that means we have another 1 wave on a larger degree here. So we'll go ahead and draw that in. We got this 1 right here, and then we're looking for the 2 wave of this larger degree here. And of course we have this huge pullback right after it. Now it's not as deep as a 2 wave should be, not as deep as our original 1, 2, this little one in here, nor this green one right here. However, it is the largest pullback that we have all the way from our March lows up until these September highs. So I think we're going to go ahead and have to use this as our 2 wave, and we'll look for the 3, 4, 5 inside of that. Now once again, I'll turn the degree up. It should be larger than the degree of this green wave that we've drawn. And I'll change the color of this as well to a yellow. So now, just like I did before, we have this green 5-wave structure that makes up the 1 of this yellow 5-wave structure that we're just starting. Let's remove the green from our chart and continue to keep it clean. So now, once again, we're looking for where this yellow 3rd wave is going to be put in. And as I've done multiple times, these are just place marked for now. These are not where they actually are, or the time, or the placement of them. Let's figure that out next. So once again, we're looking for a smaller 5-wave structure to make up our 3rd wave right here. And I think this one is actually pretty clear, and this 5-wave structure looks pretty textbook by just eyeing it right here. If we started at our 2 lows right here, we have this major push upwards on the large degree here that makes up a 1 wave. Then we come back down on a really huge pullback to here that can be our 2 wave. We have another really nice run from 150 all the way up to almost 250 at this move right here. Another pullback down for this 4, and then we're potentially putting in the 5th wave very soon. So what that would mean is that our yellow 3rd wave is coming where this green 5th wave is. This 5-wave green structure makes up the 3rd wave of our yellow structure here. And then we'd have our yellow 4 and our yellow 5 after that. Again, these are just randomly placed marks for now. Let's see if we can validate this green 5-wave structure. It looks really good to the naked eye here without testing anything. So let's just see how it performs. First things first, one of the key rules of Elliott Wave theory, in a 3rd wave, the 1 and the 4 cannot overlap. And you can see that I've actually drawn this pink line at the bottom of the 4 right here, and our 1 does not come up to this pink line. So the price of this 1 wave right here does not impede with the price of this 4 wave coming downwards. So far, that's valid. The only other rule we need to verify is that the 3rd wave is not the shortest wave of this sequence. And just by eyeing it, I can tell that it's definitely longer than this 1 wave right here. And when I say longer, I mean it puts in more price if we used our trend-based fib extension tool once again to measure the length of the 1 wave here vertically and click at the bottom of our 2, measure it to our 3rd wave in here. You can see we're far past this 1.0, and the 3rd wave even comes perfectly to this 1.618 Fibonacci retracement that I said is our most likely target for a 3rd wave. So this is just perfect. So all of our rules have passed. We also have some guidelines that we can do to make sure that this 3rd wave structure looks good. We'll use a fib retracement from the bottom of our 1 to the top of our 1 and just pull that sideways. And like I said, we like to look for the 2 wave to fall between this golden 618 and this yellow 65 that I have drawn. Unfortunately, this one comes just a little bit below it. Would have liked to see it hold about $154, and instead we came down to about $151-ish. But it's not too far off, and this is definitely still a possibility with a 2 wave. It's not unlikely at all for the 2 wave to come down to this 0.786, so this is definitely valid. And we'll do the same fib retracement from the 2 to our 4. Now a 4 we like to see between the 38.2% and the 50% typically. So between this blue and this red line. And actually, once again, we came just a couple dollars below this red 50, maybe even just a couple wicks that came below it. But we were about $4 below the 50 before we continued upwards. Again, this is not uncommon, it's just not our favorite to see it break that 50. However, it's definitely still valid. So now let's try and figure out where the fifth wave is going to come in. There are a couple things we can do here to validate and figure out this fifth wave. Number one is to put a parallel channel on this. So to channel this, all we're going to do is connect the bottom of our 2 to the bottom of our 4, and then we're going to click at the top of our third wave right here. And on this parallel channel, we're often looking for the fifth wave to finish right at the top of the channel, perhaps right where we are right now. The second thing we can do to validate a fifth wave is actually measure the length of the 1 relative to the length of the 5. And these are often equal in length. So the length of the 1 to the length of the 5, you'll see it come to a 1.0 ratio pretty often. And when it's not that, it's typically a 1 to 1.272. So again, with our trend-based fib extension tool, measure the length of our 1, put it onto the bottom of our 4 right here. And this 1.272, I have it in this greenish tint right here. This is our second most common ratio between our 1 and our 5. So now we're getting this sort of confluence box that's creating right here with this parallel channel and this 1.272. The other ratio you can look for with this trend-based fib extension is actually pulling from the bottom of our 1 to the top of our 3 like this. And this ratio relative to the 5, we look for about a 0.618 as the most common ratio. So I'll click at the top of our 3 and then at the bottom of our 4 again. And you can see this 618, we actually wicked right off of it in here. It actually used it as resistance through here. And in real time, you might have thought this was going to be the peak of our fifth wave. However, it does look like we're getting one more push upwards. The only other thing I could do to validate this yellow third wave and this green fifth wave is to measure the relationship of our 1 and our 3 of the yellow waves right here. So I use my trend-based fib extension again, bottom to top of our 1 to the bottom of our 2 wave right here. And like I said, this 1.618 to 1.75 is actually the most common zone for a yellow third wave, and in a really bullish market, we could even see all the way up to the 2.618. However, one of the rules of Elliott Wave theory is that we need to see at least this 1.0, because the third wave cannot be the shortest wave. Now, it doesn't actually have to be longer than the 1 wave, which is what this would imply. It could end up just being longer than the fifth wave, which would also be valid. However, we definitely like to see it longer than this 1.0. And if we just zoom in, you can see that right now, we're just a couple dollars above this pink 1.0 line. So at the very least, this is going to add even more confluence into this box that we've drawn. So now we have 3 points of contact right inside of this box right here. So I'm just going to zoom back out now and see if that actually makes sense. Could we be putting in the third wave here of this yellow degree, which would set us up for a move downwards for a fourth wave and another move upwards for a fifth wave? Now, one of the cool things that we actually see here is that if this is the yellow third wave right here, we'll get this yellow fourth wave to come in afterwards and this yellow fifth wave up to put in new highs. This actually could line up perfectly with our even larger 1, 2, 3 that this yellow 5-wave structure is making. Let's change the color of the larger one to a reddish pink color here just to differentiate. So this yellow 5-wave structure, of course, on a larger degree, is working on the third wave of this pink structure here. So if this yellow third wave peaks inside of here, and then we come down for a fourth wave, it would be perfect that we come up for a fifth wave to finish our 5-wave yellow structure and our pink third wave right in the original green box that we've drawn. So with all that being said, I actually do think this is my prediction and what I think is going to happen with Square. I think we're very, very close, if not already, at the peak of Square of our yellow third wave in here. And I think up next, we're going to get this some sort of pullback in here. Now, one thing to note is that when we have a sharp 2 wave, like this yellow 2 wave right here, we often get a more sideways 4 wave. So I think we're going to get something that drags on for quite a while and maybe doesn't retrace too deep. If we just put a fib retracement on it from the bottom of our 2 to the top of our potential 3 that we already have in, and of course it is theoretical for now. Let's delete our arrows to clean this up just a little bit. I told you that the fourth wave tends to fall between this 38 and the 50 right in here. However, if we end up with a more shallow 4 wave, it would not be uncommon for it to fall somewhere between this 236 and this 382 as well. So personally, what I think is going to happen is we're going to get some sort of ABC 4th wave where we come down to this pink resistance that we've already drawn. It's going to be pretty sideways in action like this for a bit afterwards for a B wave, and then we'll come into this box somewhere, which I believe I can even tighten a little bit more, maybe somewhere into like this range in here. And that'll be our 4th wave before we do our final push upwards into our 5th wave up into here, which just makes the 3rd wave on a larger degree. And of course, after that, we're looking for yet another 4th wave, which I'll just leave as a place marker for now because predicting all of this out and then trying to figure out where this 4th wave will be is just too far ahead. Now, one thing to note is that I'm not predicting any sort of time on this. I do have this ABC drawn out to go into May or June. However, it's definitely possible that it's much faster. Our 2 wave was only from about September 1st through the 1st or 2nd week of September here, maybe a week or 2 in total for our 2 wave. So it would not be that weird for our 4th wave to only be, say, 3 to 4 weeks long. In other words, this whole ABC structure that I have drawn out here, and I have it drawn just for visibility's sake as spread out like this, it could definitely finish over the next month. We could be down in this $225 to $210 range on Square sometime in March here. So personally, I've actually already acted on this. I opened some Square puts on Friday for $220 and their expiration is in mid-March. It's definitely possible that this isn't the peak. However, I think we have a lot of confluence in the box that we're currently in, and at the very least, I think we're going to get some sort of reaction and pull back downwards. Lastly, it's definitely possible that I'm wrong on my entire analysis, that we continue to push upwards and upwards and upwards, and we don't have this 4th wave pullback anytime soon. I can definitely acknowledge that I've been wrong in the market, and I've been wrong many, many times in the past. However, as a trader, we look for these high probability setups, these areas of confidence, and we need to take trades off of it. When we're wrong, we'll stop out of the trades, reassess the situation, and look for the next best trade on either this ticker or any other one. So that's my overall prediction on Square here. I think we're going to head downwards in the short term, maybe down to about $225, or at the very least, I think we're going to see a pullback down to this $245-ish support and resistance zone that we have through here. If you like this video and you want to see more similar content, do me a favor and click that like button and hit subscribe for more videos. Everything I post on this channel is very similar to the content that you just watched, and if you made it this far, I'm pretty sure you want to see more of it. Lastly, don't forget to check out my Discord in the description below. It is a paid Discord server, but you can join with your first month for only a $1 payment. If you don't like it after that, feel free to just cancel. No problems, no questions asked. You're not locked into any sort of long-term contract. If it's not the place for you, you can definitely just leave. So I hope you enjoyed this video, and as always, good luck trading.